Hi everyone, welcome back to my channel. This video is my usual weekly or bi-weekly technical analysis outlook on currencies and stocks. I am making plans for videos that are related to currencies, stocks and finance in general, so please subscribe if you like such content. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's begin. The first part of this video will be reviews of names that I've covered in past videos. This week will be on Euro Dollar, Kiwi Dollar, Sterling Swiss, Dollar Yen, Deutsche Bank, Infineon Technologies, Netflix, and Wells Fargo. The new coverages in this video are Sterling Yen, Swiss Yen, Glencore, Bristol-Myers, and Starbucks. The first name that I'll be doing a review on is on Euro Dollar, last closed at 1.0904 on the 12th of July. I covered Euro Dollar in the last video on the 7th of July. A symmetrical triangle breakout has occurred. Now what I said in the last video was that symmetrical triangles are neutral patterns and the outlook will be determined by whether there's a breakout or a breakdown. A breakout has occurred, and more importantly, this breakout closed above the Ichimoku cloud. Both are bullish signals. The textbook target for this is at 116.21. And remember what I said about textbook targets. These are just guidelines. I will not expect an immediate rally to this textbook target, but instead expect Euro Dollar to move in waves of ups and downs with potential rejections at resistances such as 109.81. There's another resistance around here, 111.39 actually, followed by 112.77. I covered several symmetrical triangles in my first video on the 22nd of June 2024 involving Euro Dollar, Sterling Dollar, Aussie Dollar, Kiwi Dollar as well as Euro Kiwi. The only symmetrical triangle left uncompleted is the Kiwi Dollar, which closed at 0.6118 on the 12th of June. Kiwi Dollar actually took a battering this week, which let me switch to a daily chart for your perspective. A sharp decline occurred on the 10th of July, but Kiwi Dollar eventually managed to recover to close on Friday above the 20-day moving average. Regretfully, it did not close back above the cloud, so the outlook is still, I would say, suspicious. The moment it closes back above the cloud, then we have a good firm upside to call on Kiwi Dollar. Now switching back to the weekly chart, as said, symmetrical triangles are neutral patterns, and you can see that for the past 3 weeks, Kiwi Dollar has managed to bounce off the 20-week simple moving average, which means that Kiwi Dollar is still supported in my view. So I'm waiting for either a breakout or a breakdown to make that outlook call on the Kiwi Dollar. But given how Euro Dollar, Sterling Dollar, Aussie Dollar has broken out of the symmetrical triangle resistance, I'm hopeful that Kiwi Dollar will follow suit. Next is on Sterling Swiss. I last covered Sterling Swiss in the previous video. It last closed at 116.17 on the 12th of June, and I said that Sterling Swiss may be forming a head and shoulders top, which is a bearish pattern, and for this to happen, Sterling Swiss needs to fall further back below the Ichimoku cloud. Now this did not happen. So far we have seen Sterling Swiss breaking above the Ichimoku cloud, breaking above the last high over here that occurred on the 4th of July. So this Sterling Swiss no longer qualifies as a head and shoulders top. That means this bearish potential has been invalidated. With the latest close above the cloud and the convergence towards the upper Bollinger, I believe Sterling Swiss has room to go further still, and it may be challenging the last high at around 116.78. A breakout above this level should send sterling Swiss much higher thereafter. And I'll be ceasing coverage on sterling Swiss going forward until there are new formations of chart patterns. Last week, I began coverage on the dollar yen. Last closed at 157.9 on the 12th of July. In that video, I said that dollar yen may be forming a rising wedge, which is a bearish pattern, and the next move is likely to be down. But I also added that dollar yen may not get a breakdown so soon. What could actually happen is dollar yen falling to the support trend line, bouncing off the support trend line before moving higher. Because what I said was rising wedge, as well as for triangles, breakdowns or breakouts do not happen this early. Usually it happens, the closer price action trades towards the apex, the higher the likelihood of a breakout or breakdown. So evidently we have had dollar yen falling to the support trend line, and it has tested and I would say bounced off the support trend line for the past 2 consecutive days. So this has led me to believe that dollar yen, the next move for dollar yen is likely going to be higher going forward, testing the resistance trend line before getting rejected and falling back to the support trend line. Then potentially we have a breakdown of the support trend line, which if that happens, there is bearish confirmation. The move is around $8.5. But of course, as also said in the last video, an early breakdown is of course welcomed. We shall see what happens next. I covered Deutsche Bank in the video on the 23rd of June, in which I said that over here, the second shoulder looks narrow and that I will not be surprised to see a rebound to around 15.1 level before falling thereafter. Of course, I was inaccurate about the height of the rebound. The rebound reached a high of 15.91 before falling thereafter, but of course no two shoulders are exactly the same height, right? In any case, I believe the second shoulder has been formed over here. So this week's close below the Ichimoku cloud has given some downside bias to Deutsche Bank, and once Deutsche Bank falls to close below the neckline at 14.35, this will complete the head and shoulders top for Deutsche Bank, and the textbook target is at 11.7. Infineon Technologies last closed at 35.9 on the 12th of July, inched higher this week, just as I said in the last video on the 7th of July. In the past videos, over here, I noted that Infineon Technologies bounced off the Ichimoku cloud support as well as the 20-week simple moving average, and therefore should be headed higher in the coming weeks. So evidently in next week, we also saw Infineon Technologies moving higher, and this week itself we also had 2 bounces, one off the 20-week simple moving average and another off the Ichimoku cloud, in which I also said should lead Infineon Technologies higher, so which eventually it did. This week, Infineon Technologies again bounced off the Ichimoku cloud, and therefore I think there should still be further upside in Infineon Technologies. But in any case, this is a symmetrical triangle. It's a neutral pattern. I will not rule out Infineon Technologies getting rejected at the resistance trend line to fall thereafter. If there is a breakout, it's a bullish confirmation. If there is a breakdown, there is a bearish confirmation. This next name is very interesting. Netflix last closed at 647.4 on the 12th of July. I believe it is developing into a rising wedge. Now, in the last video on the 30th of June, I said that Netflix is technically still bullish due to a cup and handle pattern that has a textbook target at 804.52, but the resistance at 691.72 was blocking Netflix from pushing higher, and I said that continued failure to break 691.72 could result in a decline, which could then result in the formation of a rising wedge, a bearish pattern. So let me show you how that rising wedge looks like. So it looks like this. Let me just draw your attention to this side of the chart. So we have seen Netflix attempting to break above the resistance at 691.72 for 3 out of 4 weeks. And this week's price action is significant. There was an intra-week break above this level 691.72, which eventually led to a strong rejection for Netflix, and this could be the start of a move lower to the wedge support. Once there is a breakdown below the wedge support, there will be a bearish confirmation for Netflix, and we could potentially see Netflix move 195.63 towards the downside. I covered Wells Fargo in the last video dated 7th of July, and I said that this could develop into a head and shoulders top a bearish pattern. I noted that it needs to fall further, preferably below the Ichimoku cloud, to give this bearish pattern more credibility. Well, I certainly did not expect Wells Fargo to gap down yesterday. So to be sure, Wells Fargo has not completed this bearish pattern because there is no close below the neckline. So what could actually happen is Wells Fargo rebounding in the coming days. The reason why I say this is because there is a gap down over here. And I've observed that gap downs are usually eventually closed, and therefore to close this gap we need a rebound in Wells Fargo towards the, let's say, 59.4 level before falling thereafter. Point number 2, it is because I am actually quite uncomfortable with this upward slanting neckline. In my experience, slanted necklines are not ideal. The better necklines in predicting outlook are the horizontal ones. Of course, that doesn't mean they don't happen. They do break down and they do complete. One example is Volkswagen that I've shown you in the last video as well. Volkswagen completed also a head and shoulders top via a gap down, similar to what we've seen for Wells Fargo. This also occurred via a slanted neckline, and this head and shoulders top did not have a correction. It just went all the way down to the textbook target. But I will not expect everything to be the same. Therefore, I would still prefer a horizontal neckline for Wells Fargo. So in the coming days, I will not be surprised if Wells Fargo were to just rally back to 59.4. And if that were to happen, then we will have a much better defined neckline, and we will have a second shoulder that tops out around here, and a straight neckline, and the neckline is at 55.6, and a breakdown will complete this bearish pattern for Wells Fargo. Sterling yen last closed at 205.07 on the 12th of July. I believe it is forming a rising wedge similar to what you've seen in the dollar yen on the daily chart. A breakdown below the support trend line is required to complete this bearish pattern that has a textbook move of 9.8 pounds. Now, as I've said early in this video about dollar yen, there were two bounces off the support trend line on the 11th of July and on the 12th of July, and especially on the 12th of July, price action actually fell to a low of 203.84 before closing rather unchanged for the day, and this tells me that there is a lot of indecision during this day. So I will not be surprised if sterling yen bounces higher from here to test the resistance trend line before moving lower thereafter to the support trend line in another attempt to break down from this rising wedge. It is a different case for Swiss yen. Swiss yen last closed at 176.54, had a breakdown of the rising wedge. So there is bearish confirmation in Swiss yen after the breakdown that took place on the 11th of July, and the textbook target is at 70.71 over here. Of course, as I've said with textbook targets, as with chart pattern completions, do not expect price action to fall immediately in a straight line to this textbook target. Very likely, especially after this 2 days worth of sharp downward move, I'm expecting some form of a corrective rebound that should get rejected by the 20-day moving average or by the support trend line before resuming the downside. The next name is Glencore, last closed at 478.35. I believe it may be attempting to form the second shoulder of a head and shoulders top. Now falling back into the Ichimoku cloud, or better still, below the cloud in the coming days, will give this bearish pattern more credibility. Once Glencore closes below the neckline at 448.15, there is bearish confirmation, and the textbook target is at 413.45. For Bristol-Myers Squibb, a biopharmaceutical company in the US, I believe it is forming a falling wedge. It just got rejected 2 days ago by the resistance trend line, so directionally at least, Bristol-Myers is likely to be headed towards the downside. And once there is a bounce off the support trend line, then Bristol-Myers should be headed back higher to retest the resistance trend line and possibly even breaking out of this. Now once Bristol-Myers breaks out of this resistance trend line, there is a good chance that it turns bullish. The last name in this video is Starbucks, a beaten down name all the way down from close to 116 over here to the current close at 74.83 on the 12th of July. I believe Starbucks may be forming a double bottom, but of course there needs to be further upside, preferably closing above the 20-day simple moving average to give this double bottom a bullish pattern an increased credibility. Once Starbucks closes above the neckline at 83.43, bullish outlook is confirmed. The textbook target is at 97.13. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video it will highly likely be on new crosses and names. If you like what I'm doing, please help me out by giving me a like, please subscribe and hit the notification button for more videos like this.